Can you guys hear me?
Yeah.
Yeah, cool. Okay, just checking. Um, right. Cool. You're running a little bit late, so I'll just crack on now. So yeah, thank you guys for jumping on. I'm going to be covering Justin tonight. Justin's got an eye issue, so he's struggling with screens at the moment. So I think on his last session he went over quarter theory, and me and him do quarter theory. And what I'll do tonight is I'll explain what quarter theory is, and I'll explain how I implement it into my trading, and I'll show you. So I'll show you, and we'll go through it so you guys can see. So this is my chart here. This is CAD JPY on the 1 hour. So what I'll do is I'll just take that off for now. So I like CAD JPY just simply because on the 1 minute it moves really nicely. What I do is I do smart money, I do supply and demand, and I also incorporate quarter theory into that. So what I'm going to do is show you what quarter theory is, and I'll show you an indicator that I had made that helped me with quarter theory. So the reason I stopped doing quarter theory, because I used to do a lot of live sessions on it, was just because there was less and less people getting on. Because quarter theory is fairly simple once you get the grasp of it, so there's not a lot to learn. It's not like smart money where it goes, or supply and demand where it goes quite in depth. Once you know the basics of it, you can just add it to your chart, and then you can just look at it then as specific entry points. This just don't want to overload, as I learned a good bit today. Yeah, it is for newbies, mate. I'm not going to go too in depth. All I'm going to do is just give you the very basics of quarter theory. So this is what I'm going to show you here. So this is quarter theory here. So these lines, what I'll do is I'll go down to the 15-minute. So as you guys know, 15-minute, each one of these candles is 15 minutes. And the way this works is I haven't put these lines on, right? So the way the banks work is and the way I kind of best explain it is if we were going to go and meet up at a pub, I would be like, Phil, let's meet up at 8 o'clock or 8:30 or 8:45 or 9 o'clock. You wouldn't be like, oh Phil, let's meet up at 8:26 or 8:34. It's generally whole numbers, and it's very much the same with the banks, and kind of everything is kind of very meticulous. So it's kind of what you'll see here is these are like really strong support and resistance levels within the market. So your support is always below as it supports, and then your resistance is always above, but then they change as price goes up. So what I'll explain here. So as you can see here, right, you've got this area of support here, and then it kind of works up, breaks through this resistance, but it hits this resistance here, but then comes back down in this white candle, and then you can see it then acts as support and then carries on up. And you'll see this all the time. So it kind of acts like a staircase in a sense. So the way these work is these are pretty much every 25 pips, you've got like a decent support or resistance level. So the blue is your hundreds. So, and this is on all pairs. So this blue one here, from that blue one there to that blue one there, we're looking at 100 pip move. Okay, this one here and this one here, the two green ones, this is your 75 level, and this is your 25 level, and then the reds are the 50s. So the red is the halfway mark. So whenever if I'm doing specifically quarter theory trading, generally what I'll do is I will just trade the quarters. So I generally have a pretty tight stop loss of generally around 5-6 pips, and I'm going for 20 to 25 pips. Depending on how the movement is, I may just put my stop loss into profit, and I may let it run higher, but generally I'll just secure it between the quarters. And then what I'm doing then is I'm using my knowledge of smart money and stuff to then look at key areas. So if I'm looking at, like, I don't know if you guys have learned it yet, but if you're looking at like order blocks and stuff, if there's order blocks that are kind of sitting on quarter theory levels, to me, that's just like an extra confirmation that there's potentially a good trade there. But what I'll do is I'll show you. So as I explained before, I haven't put these lines on. These lines have automatically been put on. And And when I kind of learnt about this, it kind of blew my mind a little bit. I was like, fucking hell, this is like scarily accurate. So this is this is the 1 hour chart. And as you can see here, how well price is respected on these levels. And then what you can do then is you can then use your kind of trading knowledge then to get into the trades. I've had this indicator made because there is a free indicator on, well, this is free for you guys anyway, but there is a free indicator on TradingView, but it's just not very good because you can't go back on it. So it will show you the lines here, but you can't change it too much. Whereas I've had this made specifically to go a larger range, so you can really zoom out, because quarter theory actually originated from actually 1,000 pip moves, and you weren't going for 25 pips, you were going for like 250. So they were really like really big swing trades. But me personally, I don't like being in trades for too long. I get anxious, and especially when you're dealing with larger amounts of money, I'm constantly checking my phone. I can't help it. I can't relax. So I like to be pretty much in and out of trades and done for the day or week or whatever, and I can just get on with my life. So what I'm going to do is I'm going to show you another indicator that I put on with this, and then I'll show you how that works. And then I add that then to the levels, and you'll be able to see once I've done it. So invite only scripts, it's the TQI. Okay, so this is the TQI. So this is also what I've had made. And this is the quartz indicator. So it looks really finicky, but it's not actually that hard. So what we're looking for is these blue lines here. They're known as Bollinger Bands. So what happens is when price expands, the Bollinger Bands expand with it. So they go in and out. So what they do is they kind of just expand with price, but they come back in. But when price goes outside of the Bollinger Bands, it's generally like, say, out here, you're generally in like an overbought area. And if it comes out at the bottom, you're in oversold. So generally it's gonna come back in on itself at some point. What I'm doing, and this is kind of where I'll get an idea of where the trend is going, because you always generally want to trade with the trend. So you can see here that this is kind of like going in a nice uptrend at the moment. So I'd be just looking at buys on that. So then what I would then do is I'd go down to the 15-minute. I like the 15-minute if I'm doing this strategy. And then I'll kind of look for areas to kind of get in, and I want things to line up. So what I mean by that is, let's have a look, this one here. So you've got this trade here. So what we're waiting for is we're waiting for that. Can you guys see this? Yeah, can you guys see all the colors and that? Is everything all right to see? If you can't
see it, John.
Yeah, you can. Okay, cool. Right. So this green line here that's come out, right? So this is your technically like your kind of price line. This is the line that you're following. And then what happens is you're looking for this green one here. So if I mark this up here, you're waiting for that to appear. But ideally, you want that out. So if you're looking for a buy, you're wanting that as low as possible. And then for a sell, you're wanting that as high as possible, because it's more extreme. So in this scenario here, you've got, looking at this, like, see, this is the thing with back testing. It's kind of, it's quite easy to back test, but you've got like this little order block here, right? So price has gone up, created a new high here, and it's pulled all the way back down into this kind of point of interest here, which funny enough is on a quarter theory level. And then you've also got the nice green ball here. So in this trade here, what I'd be waiting for is I'd be waiting for that ball to show. And you can kind of see that when you get the crossover of the red and the green. So as soon as you see the crossover and this green ball appear, that's when I'd be putting my entry in. So at this point here, just for training purposes, let's put it at the top just to make it like the worst trade it could be. And then what I would then be doing is I'd then be putting my stop loss just under this quarter theory level, because to me, quarter theory levels are like brick walls. If price isn't strong enough, it's just going to rebound off it and then just go the opposite way. If it is strong enough, it's going to break through, but you may find that it may hit it several times before either breaking off or kind of going through it. So that to me is like technically like a kind of not another stop loss, but just like another barrier for it not to take me out. So I'd have it pretty tight. You've got to be wary of spread as well, because even though if price come down here, if your stop loss is too tight, the spread can take you out. So just be careful of that. If obviously for when you're trading, always account for spread when you're trading, especially on the smaller time frame stuff, when you're getting really tight stop losses. If you don't understand the spread, what I mean by that is if you go on, say, your phone on MT5 generally, because everyone should be moving on to MT5 now because MT4 is pretty much going. It's being made redundant. What you'll see is you'll see two price lines. You'll see a blue line and a red line. What you don't want is you don't want the blue line to kind of hit your stop loss, because if it hits it, it's going to take you out. And generally, especially on CAD JPY, the spread can generally be between 1 and 2 pips, depending on your broker. So you kind of want to account for that pip and a half spread when you're working out your stop loss size. But it's generally pretty small here. So what you could do is in this trade scenario here, I think it's long position. What you could do, so your stop loss is there. So that's my entry there. And then, like I said, you could follow it up, but you can see this massive candle that's just absolutely blown through that point here. And funny enough, we've gone up to the next quarter theory. It's kind of pissing about on that. And then it's up to you then whether you would have stayed in it or not. But to be fair, I think I would have seen how it would have gone here. And at this point around here, if I'd seen it started pushing down, I would have just come out and secured it. But even on that trade there, you're looking at, what is that? Yeah, a 1 to 2 and nearly a half. So, and that's quite a big, well, it's not a massive stop loss. What is that? That is 71. Well, yeah, it's 15 pip stop loss. So yeah, it's a fairly big stop loss, but it's gone a decent level. But you can see price has gone through it there. What I'll do is there any questions, guys? Because what I'll do is I'll show you a couple of examples. And then yeah, we'll go through there. Is there any questions? And don't be afraid to ask either, because whatever you're thinking, I can guarantee others are thinking it. So the point of these live sessions is for you guys to ask questions. And there isn't a silly question, because when I started learning this, I was fucking scratching my head for months. So it's absolutely fine. This is the point of live sessions, for you guys to jump on and learn. So don't feel stupid, because it's impossible to feel. Yeah, you shouldn't feel stupid at all. We've got another scenario here. We've got an order block here. Price has gone up, rejected off of this, and you can see what I see. You see what I mean here about price really struggling to break through that quarter theory level. It's taken it down to the bottom there. It may have even taken a little bit of liquidity that was sitting under there, but it's taken that order block, and then it struggled to get through. And then we've got a nice green candle there. Once again, stop loss wise, your long position, it's this one. When that come in there, you probably would have been roughly around this area. You would have been having like a couple of pips underneath this. So that's 107. That's pretty much on the level. So they're roughly about that. So that's 2.5 pips. And then you could take it up to the next one. And then even then you're looking at a 1 to 2 on that. And you would have only been in it for roughly probably not even an hour. Yeah, probably 45 minutes to an hour. But that's kind of what I look for. But what you guys want to do is, once you've kind of learned how banks move and kind of what they do, you can then use that to your advantage by getting into these. This works really well. Like I said, I like CAD JPY. Also, it works well on a lot of pairs. Euro USD is probably the most popular. Well, it is the most popular trading pair. But once again, quarter theory works really well on it. But eventually you're just going to get to a point where you see stuff like, you can see this like little order block here, and you just see it straight away. And then as you can see there, price has kind of gone straight into that. And even though it could still go up, but it's kind of struggling to get through that quarter theory level there. But you always get reactions off of these levels, whether it's the next level up or whether it will carry on going down. You'll generally get a reaction off of those. So I've just got
Right.
rid of
Can
that.
you explain what you mean by the order block?
Yeah. So order blocks are the last up candle before a down move or the last down candle before an up move. So what I'll do is I'll show you. Sorry, price giving me 2 secs. I'll get that back up. TCQ. Yeah, there we go. Yeah, so what I'll do is, so the way bankers works, and I don't want to go into too depth with it, but pretty much there's what's known as mitigation. So price mitigates into candles. So price will come back into candles, then the banks will collect money that's kind of stored in those candles, right? So what will happen is generally you'll get like a break of structure, and then price will come back up to those levels and kind of collect before they go further down. So you can kind of see here, price is like rejected off of this quarter theory level. It hasn't broken through it. We've broken above this level here, so it's gone up high, and then we've pulled down into this lowest down candle before the up move. So this little order block here, and as you can see, price is nipped straight into it, and then we've had a rejection off. And once you kind of learn about this, you'll see it all the time. So what it'll do sometimes, like this order block here, it'll go a little bit below it to take liquidity, and then it will go off. But generally, if you give it a few pips either side, you can generally be pretty good. But it's the same on like a downtrend. Like so when I'll show you an example. We've got another one here. We've got this order block here, just there. Price reacts off it, and then we've got that down move, and then it rejects, and then we carry on going up. But what I'll do is I will show you kind of, actually it does it well on CAD JPY. I like CAD JPY, so let's go to CAD JPY. I like CAD JPY in the 1 minute because for me 1 minute it does it all the time. And what I'll show you what I mean. Okay, so each one of these candles, guys, is obviously 1 minute. But what you'll do is you'll kind of see how price always goes into the order blocks. So you can see here, this is your last down candle before the up move. So you've got that there, and price is hitting it, and then you get a reaction off. Then it pulls back down. This is the last down candle before the up move. So once again, it's kind of done it there. It's hit that candle, and then it's gone up. Then the way I do this, right, is it's kind of like a sniper when if you're in a war. Before you move on, if you're a sniper and you're shooting the enemy, you're not going to move on to the next stage until every single person's been shot that you're aware of. And it's very similar with this. That what banks will do is they'll kind of mitigate on the way down, so they'll kind of go into the order block as they go. So what I mean by that is this scenario here is you've got this price go down here, it comes up here, and this white candle goes into this one. So that one's now done. Okay, so he's dead, right? You've shot him, he's dead. So now we're moving up. Okay, and as you can see here, we go across here, you've then got that there, and it's kind of nipped into this now. And this is kind of how I trade the 1 minute. So what I'll do is I'll figure a trend generally. And then what I'll do is I'll kind of look at the highest order block on the 1 minute that hasn't been hit. And then I'll work out whether it's feasible that price is going to come all the way back up to it before it drops down. And a lot of the time it will. Or what they'll do is, especially what they're doing at the moment, is the banks are actually taking liquidity and then they're going. So say for instance, let's use an example. Yeah, so you've got it all here. Sorry, this is a little bit more advanced than kind of newbie stuff, guys. Sorry. Let me have a look. Yeah, we've got another one here. So we're in a, move that out of the way. As you can see here, we're in an uptrend. It kind of pulls down into this area, catches that, pulls up, makes a new high, comes back down into this area. So we've got this candle here, so you'd account for all of that. that there, and that keeps you in the trade. Okay, and as you can see, it's hit that a couple of times, but each time it's moving across, it's kind of covering that last white candle. And then you see this brown candle here, this brown candle's gone up, but it's pulled all the way back down and covered that white candle. So that's been covered. And then it goes and it starts, and then what it's doing slowly is it's kind of covering all the candles as it goes. And then what I'm expecting is future price action and reactions will always happen from previous price movement. So if I use an example, this one here, like let's have a look at one on an actual. Okay, there's going to be, yeah, okay, so yeah, you can see here. So you got this one here that's kind of sitting under here. It's been tapped in a couple of times. As you can see, it's kind of always getting tapped into all the time. And sometimes you'll get big reactions off it and sometimes you won't, but it will always go into them all the time. But what you want to do is, especially for you guys that are new, is pick 2 or 3 pairs and just stick with them. Like my go-to pairs personally are EU, Euro USD, CAD JPY, and NZD USD. They're like my 3 favorite pairs. They move really nice with quarter theory and how I trade. And then ideally for you guys that are new, what you want to do is you want to get on everyone's live sessions and you kind of want to figure out kind of what works for you, because what you'll do from today is you'll take a snippet of kind of what I've taught, you'll take a snippet from Jason, a snippet from Matt, and then what you'll do then is you'll kind of have technically your kind of own strategy, because charts are very personal. So, and the way I kind of explain it is, if all of us are in an art room drawing a bowl of fruit, we're all drawing the same thing, but each one of our pictures is different. None of them are going to be the same. And it's very similar with trading. We will all be seeing the same chart, the same time and everything, but our analysis will be different. We could get in at different times. We'll take profit at different areas. There's multiple factors that will kind of determine whether you can be successful or not. And a lot of that will be also to do with mindset. Then, to be fair, the main part will actually be mindset and greed and over trading and stuff like that, which you guys will realize in the coming months as you kind of learn more. This is kind of why I say demo's great for kind of getting the basics, but it's not going to teach you the emotional side to trading, because demo is a bit like Monopoly. You fucking just throw money out there. You don't give a shit because you know it's not real. And this is why I would advise, right, I get a lot of people message me and they're like, Sean, I kind of want to learn how to trade, but I haven't got £1,000 to throw in an account. And I'm like, you should never be throwing £1,000 into account. You might as well just go down the bookies and put £1,000 on a horse, because you're just going to spank it because you don't know what you're doing. What you want to do, and the best way to do it, and I kind of wish that I'd done it this way, but it just wasn't available because we didn't have prop firms when I started. But Finitive, for instance, do a 2.5 grand funded account. It works out with our discount, works out about $40 to do the challenge. It's you're dealing with, you'll have 2.5 grand account to go with, and then you've got to get 8%, and then you've got, in the second phase you've got to make around 5%. But because even it's cost you like $40 to do it, but because it's you're technically trading under test conditions, it's very similar to having your own money. It's very similar to having 2.5 grand in your account, because the emotions are all there, because none of us want to lose. If we take an exam, we don't want to lose it, we don't want to fail it. So it's very similar with this. You will want to pass, so you won't treat it like a demo, because yeah, you've only thrown 40 quid at it or 30 quid or whatever, but because you're invested in it, like emotionally and financially, you'll take it a lot more seriously, and it hasn't broke the pocket either. So, and the nice thing is, if you can pass a funded account, a 2.5 grand funded account, then what you can do is just build that account and then buy larger accounts, and you can go up to like a 10 grand account, 50 grand account, 100 grand account, and whatever. So, and that's the way I would have done it years ago. If I was in your position now, I would risk very little money, because you don't need to risk a lot, and just build from someone else's money, from someone else's capital. Is there any questions? Because I've gone over quite a bit in the last 15 odd minutes. So is there anything you
Um,
want to ask?
did you say the quarter theory like template? Is that an indicator that's available through us, this one?
Yeah. So both of these are available to you guys. To be fair, I took them off of the indicator form because no one was using them. But recently I've had people ask about core theory, and this is kind of why Justin covered core theory, I think, on his last newbie session, and people seem quite interested. And I think it's important, even if you decide not to use this indicator, which is absolutely fine. Obviously, you can do what you kind of want to do, but you need to be aware of quarter theory levels because I think that's really important. And it's the same for you guys that trade futures or you trade um, crypto. The levels are slightly different, but BNB, Bitcoin, they all respect levels. And Justin will use quarter, like Justin, I think, when was it? Beginning of the year or towards the end of last year, he whacked like 500 quid in a futures account. Within like 2 months, he had 40 grand just trading futures, just trading BNB because he loves BNB. He's been watching it for years, so he knows how it moves. And he ended up buying a Bitcoin and still had money left over from doing that. So yeah, within 2 months he smashed it. But once again, that comes down to screen time and just kind of learning. Really, it's going to get to a point where you guys will just see stuff like I can just go onto a chart now and I'll just see key points of interest that I kind of look to take trades from, and I don't need indicators on there. I can trade a naked chart. But for you guys, knowing this and the simple strategy and stuff is perfect because I looked at smart money and that when I first started trading, it just blew my mind. I was just like, I'm never going to be able to learn this, and I didn't have the support you guys have, and I just took me fucking ages to learn. So so just take your time, don't compare yourself to others, and just ask questions. Seriously, like nag us. That's why we're here. So it's not an issue. If you need to personal message me on Facebook or whatever, you got a question, it's not a problem at all. Um, like I don't want you guys coming in and then struggling, and like everyone struggles, but I don't want people giving up on it because they were too afraid to ask questions and kind of further themselves because it would be such a shame. But these are available. If you're interested, let me know. Send me a message, and what I'll do is I can add you to these. But what I would do is back test some bits, figure out a couple of pairs that you like to trade. I would probably stick with EU initially. EU is the most traded pair on the Forex market. It moves really nice. And what I would do is, as you guys are learning, is kind of work out structure, work out the trend and where price is going, and then just kind of have some rules in place. So with this, like I said, if it's in an uptrend, I'll generally only trade buys, and if it's in a downtrend, I'll be trading sells. And then what I'm waiting for is like key levels, but there's also what's known as equal highs and equal lows. So what I'll do is I'll kind of explain to you what the banks do. I don't know if any of you guys know this, but this is what the sneaky bastards. This is what the sneaky bastards do. Brush. Okay. Let's see what color this is. Yeah, that's fine. Okay. So what will happen is you'll get price that will go like that, and it will kind of work its way in a channel. And I could point out like this here in a channel. But then what will happen is because what the banks are doing is they're creating liquidity either side. So there's going to be buy orders and sell orders on both sides of that. So there's going to be money, and they're going to want that money. So what they generally do is they'll go up, they'll take the money that's sitting up there, they'll take out orders, they'll then go down, take out all the orders there, collect all the money there, and then they'll generally have a reversal, and then they'll go. And then if you're learning like the smart money stuff, this is kind of where you'd be looking at like a key area down here. So what will generally happen is it would come down, break structure, then price would then pull down generally into an order block around here or a supply and demand area. And I won't go too much into supply and demand, but there'll be like a key area around here that price will come back into before then heading off. And that's kind of, you need to be aware of that. And that's kind of pretty much what it does. It does it all the time, all the time. And you just see it. This is on the 1 hour. So let me show you the 15-minute. So you got this channel here. Channel's gone quite high to be fair, but even if you based it on here, got this channel here where price is just consolidating. You've got money that's sitting there. We've had it come down. It's taken that key level there. So it's taken that, it's gone up, taken that, and then it's then going to carry on doing its thing. And it just does it all the time. So it can, ideally, you don't want to be trading consolidated areas. You want a nice movement up. And you kind of, like I said, with like the staircase, you want it to go up quite nicely. And like this is yeah, this is perfect really. You can kind of see up there how it's rejected off that, but it's created that, it's broken that structure there. So that was the last high. It's come down. It's actually reacted off of the 200 EMA. So this is free. You can add this onto your trading view if you want. It's the 200 EMA, which is an exponential moving average, and it's very powerful. Price will respect the EMA quite a lot. So it will kind of react off of that quite a lot. So as you can see here, it's hit the EMA twice, and then it's worked up, broken structure, it's pulled back down into that order block area, and then we've had that really nice strong move upwards. So what you want to do is, and this is also, actually, this is really important point. You can see here, there's a really nice trade here, the opposite way. But this is why I say about not being too greedy and kind of doing it thing. So here, you can see a trade's there. So even if you do it that, have that just above there for the sell, would then be taking it down to the next quarter theory level. Because we can see here, it's gone down into this order block and it's had a rejection off. But even then, you see what I mean about the green ball being at the top end for a sell? It hasn't gone down and broken structure down here. It's just reacted off of that order block, but that would have been enough for you to do a 1.5 on that, just over a 1.5. So even if you've done one-to-ones, if you've done this strategy and done one-to-ones, you'd have a pretty decent hit rate, especially if you were picky, because you could take technically loads of these, and obviously not all of them will come in. So you just need to understand some trades will be better than others, and this is why it's really important that you kind of you have a trading plan in place. So as you guys get a bit more experienced, definitely look at getting a trading plan. If you want to know where a trading plan is, it will be it's with the psychology thing. I think it's what psychology of trading. I'm pretty confident. So there's pinned areas if you guys didn't know. So in different sections, anything that's kind of really important, there's like a pin section where you guys can go. It's either that one or it could, yeah, trading plans. There we go. I kind of give it away a little bit, didn't it? Yeah, this is Leon's template for a trading plan. There's not enough people in the group that don't have trading plans, and you need to have a trading plan. You need to have rules in place. Similar to you guys that are on the tools, you'll follow plans and you'll follow like technically rules. Like if I was doing a bathroom, there's things that you don't do and there's things that you do. Okay, and it's similar to trading. There's things that you don't do. There's things that you have to stick to for it to be a decent bathroom, for it to work properly. Like hardy board, for instance, on the floor, there's certain ways that you've got to fit hardy board. If you don't fucking do it, then you're gonna get shitloads of cracks on the tiles. There's rules in place for a reason, and it's the same with trading. You guys need to put rules in place for you guys to be successful. You need to stick to those rules, and this is where the mindset side will come in, and this is where it will really help you. Is there any more questions? I do fucking waffle, guys. So seriously, just like if there's a question you've got and you want to ask it, just butt in, because I'll just fucking I'll just chat for ages.
Sean,
yes, mate, right?
Yeah, did you say previously? I can't remember now. That you look at the hour for structure and you look at the 15-minute for entry.
Yeah, generally, mate. Yep. So it depends. So what I do like 2 or 3 different strategies depending on what's available. If I'm doing this strategy, I'll go for 15-minute. If I'm doing specifically like order blocks, then it'll be generally lower time frames, like 5 minute, 1 minute. But for this, what I'm showing you here, what you see on the screen, I'd be looking at the 4 hour, 1 hour for structure for trends. And then what I'd then be looking at, working my way down to like the 15-minute to then look at entries for this.
Right, gotcha. Yeah, I couldn't remember what you said.
Yeah, it's 15-minute, mate. Yeah. You can, by all means, you can go. It works on all time frames, but it's more successful on the slightly higher time frames because the lower time frames, like the 1 minute, are a lot more volatile, and you can on the lower time frames, especially like the 1 minute, you can get break of structure all day long. Like it'll have like a general. I'll show you an example. Like I'll draw it out for you so you guys can see. So generally on a larger time frame, you'll get like a nice. Yeah, I'll show you here. So on the 1 hour, what will happen is, say it comes up, this is like your top. It'll come down, it'll break the structure from, so if I go, I'll just work it up like that. Okay, so what will happen is it will kind of break structure and it will kind of create a new low. So we know now generally it's gonna be on a down move because it's broken that last down before the top. And then what will happen is on the 1 hour, it will kind of come up into this area, mitigate an area, and then it will kind of then create a new low, come up into an area here, and it's like a step like that, right? So that's generally what a 1 hour or 4 hour or day will look like. It will be pretty neat. But the issue with it is on a 1 minute chart is you would have, say, it go up like that. So this point here is this point here. But then what will happen is it will kind of like, it can peak, like it can do an equal high and then come down, and then it can go like that and go like that, then come back up like that, really drop, go down there like that, then pull all the way back up like that. And it's a bit all over the place. So when you're doing this type of strategy, you're gonna have a lot more success doing it on like the 15-minute and above, just simply because there's not as much volatility in the movement. Because even though this is a downtrend, like we haven't really broken any highs, we've broke some small kind of structure here, but overall it's in a downtrend. So it's mimicking that, but it's just super volatile, that's all. So it's going to be a lot less reliable. So this is why I kind of say it's better to stick to the higher time frame stuff. And I found that the 15-minute is pretty good. So soon, and you can kind of, when you're watching it on like let me see if I can find a trade. Let's have a look. We've got live moving markets, haven't we? Let me see. Okay, so here we go. We've got a potential trade here actually that's just come in. Where are you? There we go. Okay, so this is on the 5-minute. So at the moment, that to me looks like it's going up, but if you look at this indicator here, it's saying that we should be getting a crossover, and we can see a crossover there. So when the red and the green cross over, that's when you get it. And I'll move it there so you can see. So in this scenario here, what we'll do is we'll set the trade up now. So entry would be here. Stop loss, just to be safe, where are we at? 19. Yeah, okay. So I would have it just above this quarter theory level there, and then I would be taking it down to here. And then we're in that now. Okay, don't take this trade because it's not the best setup, but I've quickly just gone on to CAD JPY. Green is in the top area. So yeah, this is kind of where it would be. But what I would be looking at is it is in a downtrend. And you see what I mean about the 200 EMA? It's just kind of, as it's moving down, it's kind of nipping it, but then just going. The time of day is also a really bad time to trade because it's 8:30. So at 10 o'clock, the spreads widen, and spreads can be really bad at 10 p.m. on CAD JPY, depending on your broker. they can go to like 20 plus pips. So you could be in massive drawdown, or what could happen is that would take me out. So if I was in that at 10 o'clock, it'd be very likely that the spread would take me out of that trade. So the spreads widen, and especially the top spread will just fly up. And if the spread flies up and hits your stop loss, that's going to take you out of that trade. So this is generally like the CAD JPY and Euro USD, and all of those move really nicely. Well, Euro USD moves nicely from about 6-7 o'clock in the morning all the way through the day. CAD JPY is best through the night. But this here, even Euro USD, it will probably go about 8 pips roughly, depending on your broker, which is still pretty tight. But what I'll do is, like you guys have seen that, I'll leave that on. And
Sean,
yeah.
If this was, say, 8:30 this morning, and you was looking at this, would you jump on that? The reason I'm asking, would you not wait till it got to a quarter level and then try and get in?
Yeah, but the way you've got to look at this, right, is it's kind of reacted off of the quarter theory level twice already.
Yeah.
Do you see what I mean?
Yep.
So it's kind of, even though it's kind of gone through, it hasn't right. Okay, so when we're talking about putting rules in place, we can see at the moment that it's struggling to get through the 200 EMA.
Yeah.
It's hit the quarter theory level twice, and it's still struggling to break through it.
So you're quite confident that it will go down the way then?
Well, to me, that's in a downtrend. So
yeah.
it's there's a couple of points there where I'd be fairly confident it would come down to this level.
Yep.
All right. But this is what I'm saying. This is kind of where you need to gauge it. It's not the cleanest trade. Ideally, the cleanest trades are when you get it smack on a quarter theory and it's really struggling to break through it. And then you see this, especially if it's like an equal high or equal low, and it's reacted off an order block, and then it's kind of reversing. They're like the really nice ones. This one's not amazing, but to me, you can see it's on its way down. It's staying on
Yeah, it works.
moment. Yeah, like the 200 EMA, ideally, if you do incorporate that into your trading, you want to be taking trades that are under the 200 for a sell and above the 200 for a buy, because because it will kind of react off it as it goes down.
Okay.
Right.
Yep, nice one, mate.
So yeah, we'll just see what that does. But it could go up, it could take me out. It wouldn't surprise me if it maybe comes up and hits this quarter theory level again before coming down. But this is kind of why you've got to cover yourself. So also what's an important point is, when you're going for your take profit, don't always have your take profit dead on in this scenario, dead on the main 100 level, because price won't always hit it spot on. So what you want to do is give yourself like a few pips grace, and it's the same on kind of entries and getting in. So in this scenario here, I would kind of bring up maybe at like 2 pips, because what can happen is you've got to account for your spread as well. To also, both parts of the spread need to go through your TP for it to cut you out of the trade, for you to win that trade. If only one part of your spread goes in, then it's not good, because what can happen is if you have it straight on the quarter theory level, and then I'll do 2 spreads to show you. So you've got this one here. So this is going to be, I'll change the color. This will be your blue one, for instance, and then you'll have your okay. So actually, I think it's around like that. Okay, so they're your spreads, right? So this is what you'll see on MT4, MT5. So if your take profit is here, and I'll change the color of that again. I'll change that to green, so that you guys can see it as kind of taking profit. So that's your take profit, that green line. What can happen is your spread can go through there, but if your other part of the spread doesn't break through, so say for instance, like the end of your candle is now there, right? Because that's where the candle, the end of the wick will be. But the problem is, if it doesn't go down further, the other part, the spread part, won't go in, and it won't take you out. Okay, so what happened is if that then reverses, even though this part has crossed the line, this part hasn't, you're still in that trade. And it's the same if you guys set pending orders. So if you guys set like a buy limit or a sell limit, do you guys know what buy limits and sell limits are?
Yeah.
Yeah. Okay. So if you set like a sell limit, for instance, so a sell limit, I don't know, say we've got let's have a look. Okay, right. Let's say here you've got your entry there. One second, let me sort this out. I can fucking get it. Oh, sorry, too far. Right, okay, that's your entry there, right? So this is your candle here for that order block for it to come in and have a reversal off. So you've set you're like, okay, I like this order block here. That looks fucking sexy. I think price is going to go into that order block and then have a reversal on it because we're in a downtrend. It's going to pull back up into that last up candle before the down move, which obviously, as we know, it's done. But what you've done is you're kind of looking at it down here, but you don't want to wait around for it because what could happen is it could consolidate along here for the next couple of hours before going up. So you're like, I don't want to watch it. I'm just going to set a pending order. So your pending order's there. So what can happen then is price can go up into it, but as you can see, both haven't crossed the line. So even if I take this off so you guys can see, guys, 2 secs. I bet it's going to fucking remove all of them drawings in it. So I'll just move over there. So as you can see here, so you need both parts to go over that green line to put you in the trade. Okay, and if it doesn't do that, then it starts reversing on itself, then you've missed out by probably like half a pip or something like that. And this is why you need to give it a bit of grace on the movements. And sometimes you'll get them where what you'll do is you'll set, and people do this all the time, and I've done it shitloads of times, but what you'll want to do is you obviously want to get as tight entry as possible. So like this, for instance, you'll put your entry at the bottom of that. Make it bigger so you guys can see. So you'll put it at the bottom of that wick, which is fine. But depending on what currency pair you've got and how big the spread is, you can see here that it's kind of hit that at the top there. So the wick has gone there, but it might not have got you in. So this is why even though you've put it under that candle, which is absolutely fine, because you've left it so tight, you've just missed out on entering that trade. So now the trade's reversing and you've now missed out on that profit. So what you actually want to do is, and if I move these out of the way, is you actually want to give it a little bit of grace. So this is your new entry. And actually now you should be in that trade on both parts. Okay. And you're probably giving the bank like probably an extra pip, maybe half a pip. But that extra pip, half a pip, and what you do is obviously you allow that in your stop loss. So your stop loss on this scenario here, I'd probably look at this high here, for instance. So that would be your stop loss there. So rather than you have, so you've got there, that's 46, your entry is here 35, so you've got 11 pip stop loss. So rather than having like a 10 pip stop loss, you've now added another one on, but it's pretty much not guaranteeing you to get into the trade, but it's giving you a lot. Like the point of trading is everything is probability, and what we know and kind of what we've learned from what the banks do. So it's a lot more probable to give one pip and you be in the trade than not give 1 pip and kind of miss a potential trade, because it doesn't matter if you give another pip, because what you do is you just change your lot size to suit. So your lot size will just be a tiny bit smaller to account for the extra pip that you've given for the risk. Does that make sense?
Yeah.
Yeah.
Yep.
Okay, cool. Sorry guys, I've kind of gone off on a bit of fucking tangent here. It was meant to be a little bit easier than kind of it is. I don't want to blow your minds, but this is recorded, so you can watch it back anyway. I will stop in a bit because yeah, I don't want to go too much into it. It is massively daunting because it is like learning this took me a while, but once you get it and you start seeing stuff, it really does come together really quickly. So yeah, it's just a case now of kind of being aware of spreads, being aware of entries, and kind of then just following rules and sticking to your trading plan. And this is where most people will fail. If you kind of speak to anyone that's done any type of trading, and they're like, "Oh, it's fucking bollocks. It doesn't work," and all this, and you say to them, "Actually, how many times have you been in profit, but you haven't taken it because you've always wanted more, or you've gone for more?" And if they're honest with themselves and they're honest with you, they'll be like, "Yeah, a lot of the time, I could have had profit, but I wanted more money." Because us as men, we're a nightmare.
Human
Women,
nature, isn't it?
what's that?
Just saying, it's human nature to want more.
Yeah. Women, mate, are so much better traders than men.
Yeah.
Because they're like, my wife watches me trade and she freaks out and she's like, "Just take it." And I'm like, "Well, no, it's only at 1%." Because when you get to like larger accounts, you have to look at everything as a percentage, because if you look at it as actually monetary value, it's quite scary that you can make in like a couple of trades what someone makes in a whole month. So you can't think of it like that, because that will affect your trading. You have to look at
Yeah,
it
definitely.
in relation to your size of your account, right? She doesn't really understand that. She'll have like a 100k account and take shitloads of £10, but she would have like 95% success rate, because as soon as it went into profit, she would just win. She would just take it. But generally, women aren't as greedy as men are, and this is kind of where we try and help as much as possible on the mindset side of things. Is when you guys trading, there's shitloads of strategies. Most strategies will work to a degree, right? What we've got in here, apart from some of the quarter theory stuff and the simple strategy stuff, a lot of it you can go and learn on YouTube for free, if you know kind of what you're looking for. But what I find with having like an actual community and an actual group that help each other is you're going to come on 10 times quicker than learning by yourself on YouTube. Like I would have given up if I just relied on YouTube. Fucking probably about 3 months in, because I just wouldn't have grasped it, because I had no one to go to. I would have had no one to go to for advice and reassurance, and on my shit days to talk me out of quitting and stuff like that. So this is the reason why the group's so good, is because everyone has everyone's back and everyone helps everyone. There's no fucking dick swinging and stuff like that. If someone does genuinely well, everyone's happy for them, because everyone wants to see everyone succeed. And this is the nice thing about this. And this is why you never see really anyone slate TFT, because there's kind of really nothing to slate. No one touches your money or anything like that. All we're doing is we're just teaching you guys what we've learned, and then hopefully you guys can pick it up a lot quicker than we did. But hopefully, guys, this has helped you a little bit today. If you are interested in obviously having the indicators, then just let me know. I'll download this now and I'll stick this in the newbie recorded section so you guys can watch over it again. But yeah, sorry, I was planning on making it like super simple, but we've gone a little bit deeper into stuff. But you're going to pick it up anyway over time, so it's all good. Is there any questions before I go?
I spoke to Justin there the other day because I watched his Friday newbie session. He said he was going to speak to you about maybe start doing some quarter sessions.
Yeah, I can. If there's a need for it, I do miss doing live sessions.
Yeah.
I haven't done live sessions for a long time. But there was just I was getting to the point where I was getting like one person on. So it was kind of just seemed a bit pointless, because people had moved on and were doing different things, which is fine. But at the same time, there's no point me just kind of like sitting around for an hour.
Of course, totally understand.
No one jumping on. So if there's guys, if you want help and you want to learn quarter theories and you want to do this, then I'm more than happy at doing a session a week on this. It isn't a problem.
Well, I was doing this for a while up to last summer, and I was starting to get my head into it. And then shiny new object syndrome came along with Matt Simple Strat.
Yeah, of course. Yeah,
so I jumped on that, and in the morning I didn't really have time to watch your sessions because I had to go to work.
Right.
But no, I'd definitely be interested in getting into the quarters. I always liked it.
Yeah. Okay. That's cool. Okay, that's fine. I'll speak to Dan and I can start doing quarters again in the evening. And then if it dies down again, then I'll just stop it. Worst case scenario.
No, that's fair enough. Yeah, that's all you can ask.
Yeah, I've got plenty of old sessions, mate, on YouTube. I'll stick them in the recorded newbie section bit that I done like a year ago. But they're all relevant to to this. They're all relevant to what I've kind of shown you guys today. So they're just older videos. So hopefully they'll help a bit. But no, cool. Yeah, has anyone got any questions before I go? Okay, cool. Phil's
No, it's all good, mate.
Yeah. Awesome. Okay, guys, thank you for jumping on. Have a nice
Thanks,
evening.
Sean. Appreciate that.
Cheers,
Yeah,
Sean. Nice one.
I'll catch you guys soon. Take it easy.
See you later.
Bye.
See ya.